Welcome to The Curve Weekly, where we read the finance news so you don't have to. I'm Vic Harris. I'm a finance professional and have made a career out of making money for other people.
And I'm Sophie Hallwright. I'm an ex-TV, radio, music industry producer, and I was just really sick and tired of not knowing anything about the economy or money, so we made this podcast. We are also joined by our producer, Emily Rigby, and our social media manager, Lucy Munro, who are doing all the hard work behind the scenes to make this show possible.
In today's episode, we have both been to see Olivia Dean, the amazing, amazing artist, and naturally, we're breaking down her business model. Is it her $1 billion of streams? Is it her sold out shows? Is it her endorsements that make her the most money? We break it all down.
Next up, the London Marathon has brought in a record amount of money into the UK economy. London and the UK used to be one of the financial hubs of the world, if not the financial hub, but things are not looking very shiny at the moment. So we're going to look into what does this mean for your investments and your wallets.
It's also reporting season, which means some of the biggest companies on the earth are delivering up their report cards, and most of them are terrifyingly good. We're doing a quick fire round on what this tells us about AI, your daily habits, and the future of investing in tech.
There is a cool girl athleisure brand that you may know, in fact, you definitely will know. It's underperformed by about 80%, and there is a lot of drama going on behind the scenes in terms of like who should lead the company, what direction they could go in.
So we're diving into what happens when a brand loses its cool, the board starts fighting, and the new person being brought in comes straight into the drama.
Before we dive in, absolutely no personal chat. We go straight into our favourite girl, Olivia Dean. I woke up so excited this morning.
Nice.
I am going to my favourite artist, Olivia Dean. I wish I knew her middle name. I would have used her full name.
I went on Wednesday.
Did you?
It was so good.
Really?
Okay. I felt like I was watching Tina Turner or like Diana Ross, like before they become, well, she's already incredibly famous, but I was like, this is someone that's going to be around for a long time. And just knowing every single song, I was like, really need to go to toilet. And I was like, you know what? I just can't. I'm going to
pop a squat right here.
I'm going to miss a banger. But no, it was incredible. I came home and I was like, gosh, I wonder how much she makes, because she sold out 3 O2 arenas, which in London is like, massive, massive iconic arena. And
how big is O2? Because that was where we went for Taylor Swift.
22,000 people.
A lot, isn't it? Can I say before we move on to the stats and finances of this, which I'm quite excited to look into, I love, and I've tried purposefully to not engage with the social media posts because I want it to be a surprise.
Yeah.
I don't want to go and be like, I've seen that on Instagram. But the tiny snippet that I saw, she's wearing this big, beautiful white skirt or something. And I just thought it's so nice to see an artist wearing beautiful clothing that's not tacky, but still quite big and performative and looks good on stage, because I feel like her styling is quite cool. It's not like tacky and jazzy
it's all
and sequiny.
PR, right? Like it's all, because she was like jeans and sneakers when she first released her first album. And now she's had like a massive glow up. Like she's always been stunning, but like in terms of her fashion and like the fan that does her hair when she performs, like all of that.
Even like Dua Lipa or Taylor Swift, you look at their outfits and it's, for Dua Lipa, you're kind of like, I'm a bit disappointed that that's your stage outfit, because you have impeccable, cool style in real life, but then as soon as you go on stage, you kind of look like jazz hands.
One piece glitter.
Yeah. Whereas it looks like in that tiny snippet I saw of Olivia Dean that her outfits are beautiful clothes that
Apparently
still
she
are quite
wore
grand.
a Beckham Bridge dress or something when she did an Australian tour, and it sold out 10 times over.
Of course it did.
Yeah.
I mean, she is a walking, I was going to say coat hanger, which is not what I mean, but you would see her in the outfit and think.
How gutted would you be if you'd be stoked if she wore your label, but then you'd be gutted that you didn't like stock more and then you sold out. Oh, you'd be like, But
even for Beckham Bridge, the fact that, yes, like maybe that style sold out, but probably a lot of people had never heard of Beckham Bridge until that point.
Totally, and it's also like people onto your website, right?
But yes, we wanted to do a deep dive on her because there's a lot going on behind the scenes, and I love that this is a story we're going to talk about because it's not the kind of thing that you would see in the news or in headlines. But I'm assuming you are watching the show thinking,
Yeah, well, I was just like, there's been a lot of artists that have been touring lately. I was like, how much do they get from touring? Like, who owns them? Like, all of this. And she's actually signed to Universal Music, which we also spoke about the other week, and I can't remember why. Oh my God, my brain is turning.
Oh no, we spoke about it because there's someone trying to take it over, private equity, that random guy.
Yeah, and it's trying to get Bill.
One of the two.
One of the, yeah, it's definitely not Mary or Jane. Or like, do you know Mary was actually one of the top names for like 2025 or something?
It's not true.
And I was like, I need to send this to So.
It's because you mention it
I
in
know.
every podcast.
I know.
For anyone that's new here, the OGs will get it. But every time she tries something, it's an example of something. So it might be Mary goes to the shop, but every name she uses happens to be Mary.
Anyway, she's owned by Universal Music. She's also huge on all the streaming platforms. Like Man I Need has had
Cannot wait to hear this live. Did you cry at any of the songs? I hope I do.
There's a few like...
Yeah, all the way through.
No, I didn't cry. I was like decked out in merch. I was like, oh my God.
What did you buy?
Like a t-shirt and a hat.
Oh, wait, stop. You actually did. That's so funny.
I know, it's such a waste of money, sorry. Do as I say, not as I do. But she's had 1 billion streams on Man I Need, which is wild. Like 1 billion people have listened to that song. And so I was like, well, I wonder how much they get, because I know they get very little from those streams, but they get 0.003 to 5 cents per stream. So yeah, 1 billion streams is like $3 to $5 million, which is still
nothing though for how many people have listened.
And how few artists would get to 1 billion.
Oh.
Like Spotify must just be like a bit of a like cream on the top kind of thing.
Yeah. I mean, I think that's the point, right? It's almost, it creates the fandom or the people that listen, but it's absolutely not giving them the money.
Yeah, that anyone can. And that 3 to 5 million is shared between the label, the distributor, publisher, strong. Like there's so many people in that food chain that get Olivia Dean or any other artists to where they are. And then I was looking at her income and I was like, well, you know, how much does she make from touring? 40% is from royalties and streaming.
Whoa.
Yeah.
That's actually higher than I would have thought.
And then 30% from touring, because again, I think with touring there's so much cost, right? You have to pay like staff, production, yeah. And then 20% from endorsements like Chanel and stuff, because she's obviously the face of a lot of brands now.
I'm so shocked by that, because I was looking up how much she was like earning per show. And she's doing, I think, 52 nights.
Yeah.
Which is like 1.3 million pounds per show. When I saw that, I thought, oh, well, obviously the biggest moneymaker for her must be touring. It's wild that it's not.
Well, you only get about 10 to 20% of your tour profits and goes to the artist.
Because I was thinking, nearly £1.5 million per show. What a day rate, you know? I was thinking, but like, stunning from her. She goes up, she sings her 20 songs, and she gets nearly £1.5 million. Obviously not.
Yeah,
no.
But you think like, what goes into a tour, and then you look at Justin Bieber, and he got 10 million for 2 weekends.
True.
You know, and she's doing like 52 shows. Like, even though that's a lot. Yeah, but this is why so many artists are touring, because it is a good money maker. You know, like Spotify's so crowded now. The discoverability and like trying to get through so much of the noise of like so many artists on there.
One of the things that I thought was quite interesting when looking at her financials and the idea of being with Universal Music, I don't know how people will feel about this, because I think there's still this underlying, the record labels do artists dirty, or they're these big, dirty, awful men that are like taking all the money from our beautiful artists. I feel like there's still that undertone.
What was that movie? And they were like, was it Honey? No. Oh,
I loved that film.
Oh, I know.
That song, I believe, was kind of my like amp up song as a teenager. Whenever I was feeling nervous for an exam, I'd be like, I believe. Yeah, anyway, so embarrassing. My sister actually brought that up the other day in front of someone. I was quite mortified. Like I would sit in my room listening, like crying, being like, you've got it.
How many like 90s movies were there like that though? Like so many. And all of them just popped off.
Yeah. But I was thinking, do our listeners or do people feel like they would want or be excited by the idea of being invested in the artist? Because obviously as a fan, you can buy a ticket, you can buy merch, which is giving the artist money. But if you invest in Universal, you technically could own part of Taylor Swift, Billie Eilish, Olivia Rodrigo, Sabrina Carpenter, Chappell Roan. Like,
when you're going to a concert, you can be like, well, it's not all, you know, the money that I've spent on this concert is actually coming back into my pocket a little bit.
Do you know what I mean? It's like if you invested in Universal Music, literally, I was looking at all of the artists that are under that umbrella. It's kind of most of the music I listen to, like Lady Gaga, Ariana Grande. Do people feel like if they're invested in a label, they can then feel excited about an investment? Because I think there's this disconnect between, okay, cool, I'm investing in, I don't know, the S&P 500 or whatever. And, you know, we always talk about invest in things that you know or like or love. Maybe just like flipping the switch and thinking, if you love artists, you could look at all of the different record labels and how much they make, and you could actually invest in them if you wanted to.
Yeah. And then, when you're deciding to go to a concert, if you're going to go to Taylor Swift or, I don't know, Bad Bunny, you'll be like, well, I'll go to Taylor Swift because the money's going to come back into my pocket eventually.
Yeah. I mean, I'd love to do a deeper dive on this at some stage, because I think that there's a huge narrative around women, particularly in pop, pushing forward culturally, but also financially. Like, I could be maybe seeing this with just a feminist lens for the sake of it, but when I look at what's happening in the music industry and, you know, you see headlines like in 2024, women were like absolutely dominating Billboard 100. Like there was mostly women pop songs that were top rating. And then you think, okay, so all of these artists that are killing it, often a woman, and then they're going and doing shows. Like we spoke ages ago about Taylor Swift and her, like, was it $2 billion or something she made on her tour? Like it was crazy.
Yeah.
And what that did to the economy around the world with people going and spending on hotels and blah, blah, blah. It'd be quite interesting to do a deep dive on women in the music industry in general, because I do feel like there's something interesting in the angle of they're bringing all this money into this asset that is music, but the underlying people who own the record labels or are pulling the strings are often men. You know, like all of the CEOs of these businesses are all men, except the people that are making them the most money are female artists. Like it's just quite interesting.
Which is why the more women invest and the more women invest in the likes of Universal Music, the more women own Universal Music, because as a shareholder you own the business. Therefore you can decide who runs the business. So it's like if there's, you know, a CEO or that you don't agree with or that you want in the business that you run, the more that you own, the more that you have a say in who runs the business. So,
I also just think in general, this whole conversation, which we've now had a few times with the idea of, I think because you were talking about Universal being taken over by a new private equity company, and we spoke about that a few weeks ago if you missed it in the Curve Weekly, but I think there is kind of this big movement happening within people seeing music and the music industry as a really valuable investment. And it's interesting because I love it because I love music and I also love pop and I love artists like this that are owned by big record companies. And I don't know, I feel like there's something in it, particularly for people that feel kind of unexcited by stock investing.
Yes.
Because it's not tangible, it's not exciting. But if you feel like, well, I'm invested in all my favorite artists, that's kind of fun.
Yeah.
And when you listen to it and you've got a stream and you think, okay, part of this is going to my investments into Universal, part of this is going to my artists that I love.
It's like with everything, right? Like even if you owned a car brand, then you're more likely to buy that brand of car as a consumer and support it because you're like, well, I've got a vested interest in this being successful. Even clothing brands, you know, you become a bit more of a invested consumer as well. Yes.
Because the more purchases of something, the better that stock's going to do.
Yeah.
Yeah, love that.
The UK. I feel like
we're in a sinking ship, aren't we?
I mean, I want to instill some positivity for people out there. Some positivity for Brits out there. But honestly, really struggling to find some positive headlines about the UK at the moment.
Really?
Yeah. Sorry, guys.
Okay, so for anyone that's not in the UK or hasn't seen stuff on social media, the London Marathon is this massive event that happens every year.
Yeah.
Huge amount of money's raised. We'll get into the stats and stuff in a second, but I didn't go to this and I am really gutted. Everyone says it's the best part of humanity. You go there and people are just cheering on strangers and people are crying and like there's just like a lot of love there. It sounds like the airport scene of Love Actually.
Yeah. Oh, I saw this video of this guy standing on one side of the train, like waiting for to get the tube, and there was like a sea of people on the other side, and he was wearing his medal, and the whole other side of the platform just starts clapping.
Way. Do you know this is a controversial opinion, but I feel like doing the marathon now has become so normal. Like I went and bought groceries that I realise it is enormously.
Are you gonna do one?
No, I was just no, absolutely not. And I think I wouldn't, because so many people do them now that I don't feel like I get the credit that I would want.
I know, it's like,
because it's like, oh, you ran a marathon, cool. I know 500 people that
it's
have
like
done
starting
it.
a podcast. Oh, cool.
That's what I mean. I know, it's like so unoriginal, which is so shit to say, because like this is one of my favorite stats ever. Sorry to talk with you, but I was saying this to our team like off mic last week, and they were like, you've got to include this in the podcast. And I thought, okay. And I think I've definitely told you this before, but running a marathon is actually, like, it started because someone ran to deliver a message that, like, they absolutely, it was some really important message. I probably need that part of the story to make it a bit more of like a, wow moment. But basically, this person, who I think was a guy, ran with this note for 42 kilometres, delivered the note, and then died. And that's where the marathon came from, in terms of it being called that. So obviously, it's a
stress
really far way to run, and huge stress on your body. But now that everyone's doing it, I'm just a bit like, oh God, now it feels like not a big deal.
Congrats to anyone who has run a marathon. I mean, the training, the mental fitness that goes into it, the like physical fitness. Yeah, I can't even. You need some really good playlists. Universal must be killing it on London Marathon.
It's so weird you say that, because apparently no one's listening to music, because the atmosphere is so encouraging and amazing that people don't have AirPods in, which I just thought, oh God, I feel like I would be bucking the trend with the loudest Justin Bieber playing in my head.
And then I get to a point where there isn't spectators, and I'd be like, guys, where is everyone? Help!
Shit, I'm not going to keep going.
But anyway, yes, I looked into the numbers. Funny that. The London Marathon it's the world's biggest marathon, which is crazy. I was like, what about the New York Marathon, Boston Marathon? Like, no, there is nearly 67,000 people that ran the marathon in 2026, 800,000 spectators, nearly £100 million is raised for charities.
That's so impressive.
And there was about a £400 million economic boost to the area, from like restaurants, from people, coming into London to view it, accommodation, like all of that.
400 million's a lot.
Yeah. It is a big moneymaker for London, not just a marathon run.
It's so interesting, this idea of cultural moments or events, whether it's a festival, whether it's Coachella, whether it's Glastonbury, whether it's London Marathon. I never really thought of those as opportunities to make money. I know that sounds like a weird thing to say, but I met someone recently who's been trying to get a new festival off the ground and trying to get investors for it. And when you then hear the stats of how much, I think it was a $70 million profit we spoke about with Coachella, and it's a privately owned business. There's so much money to be made in creating events and moments for communities to participate in something. It's not just a cool event. It's actually also, there's a lot of financial upside.
Yeah, and like that's why a lot of countries kind of bid for big events, right? Because
like
it's like
the Olympics.
Yeah, it's like, okay, well, cool, it's going to cost us $2 billion, but we're going to get $5 billion out of it for the economy. And so it's like that, you always kind of think of it as like a return on investment. But did you see even like Nike did like a whole advertising campaign around the London Marathon? Didn't. It was quite bad. So it was like, it was like this big billboard, and it's like, runners welcomed, walkers tolerated, and it got like ridiculed, and it was like in like the week leading up to the London Marathon.
Oh my God, I just don't understand how shit like this gets through a marketing team that big.
But I'm also like, we're talking about it, so maybe it was all part of the plan.
Maybe they were like, do you know what? Who cares?
This is controversial, but let's put it out there, and then
you're right. Yeah. Maybe it is the most genius thing ever.
Yeah, London Marathon. We should do it next year, so.
Oh, there's no way.
I'm like, please don't put that on.
Also, I would be walking. I'd be walking for sure.
I remember I did a half marathon, and I'd never run more than 5Ks, and it was the night before, and I was like, oh, should I do it? I'm like, how hard it can be? Just put one foot in front of the other.
That's so classic Victoria
Honestly,
Harris. Oh my God.
I reckon like 3 weeks after, like my hips were fucked.
Is that why people just fucked back?
I don't know. Like, I reckon it was. Yeah, I was just like, you idiot. Why do you think that you're just like better than everyone and can just like run a marathon?
Anyway.
That's probably the most positive news headline out of the UK at the moment.
Love it.
Yeah.
Nice.
So we'll start with the good. And UK is really struggling at the moment. And it's a combination of a lot of things. But one of the headlines is that we've had an increase in taxes this year. And so now the taxes in the UK have risen the most in any other country, any other developed country. So they rose about 2.5% last year. So we're now at about 32% is what the average person is paying in the UK on tax.
So let's say you earned £100, £30 of that on average is going to the government for tax.
Yeah. Last year was one of the biggest jumps in developed countries around the world. And that's a combination of, national insurance had gone up, and in the UK, national insurance is like superannuation. So that's what you put into a big pot for the whole country, so that if people retire with no retirement savings, there is a little bit of a buffer. It's tiny, but it's like that's kind of the base that the government will pay you, kind of like your pension, state pension, essentially. So that went up massively last year. Also, we spoke about this of the fiscal drag.
Oh. So behind the scenes, something happened in the UK, and like all this tax business was happening, and we were trying to understand as a team what was going on, and the word fiscal drag kept getting thrown around, and I would say 4 out of 5 of us, the only person that understood what was going on was Vic, and everyone was just like, fiscal and what? Like, what the hell?
And it's essentially when the tax brackets are frozen. So if you think about inflation, everyone's wages on average should go up in line with inflation. So like 2 to 3% a year. But
can you explain why? Oh my God, we're here again.
I know.
This has got PTSD. Explain it again. Because when I first heard that, I was like, I don't know what that means.
Yes. So this is like, because the cost of everything is going up, 2 to 3% on average a year, that's inflation, then if you want to like stand still and actually still be able to afford what you can afford each year, then your wages should be going up by the same amount.
Which means you stay in the same tax bracket based on what you earn.
Well, the tax brackets then need to go up as well.
In the same way.
Yes, because otherwise you're just naturally going up into a higher tax bracket. So it's kind of like...
Oh my God, okay, I've got a good example. So let's say you were on £49,000 and you didn't go up in line with it. Sorry, your salary does go up with inflation, so you get to 50, but the tax bracket doesn't move in line with inflation. You then hit a much bigger tax bracket, but you're actually kind of earning the same as what you did a year ago because you've just gone up with inflation.
And so like your boss might be like, yep, cool, we're going to give you a 3% pay rise. That tips you into the higher tax bracket because the tax brackets haven't moved. You're only taxed at that higher tax rate on the additional income that falls into that bucket. But still, you'd be sitting there going, cool, I've got a 3% tax
and you actually
increase.
could be worse off.
And it's actually, no, you might have 1%. So therefore, if inflation's 3,
Basically the point is it's kind of a cheeky way for governments to say that they're not raising taxes, right? But they actually are secretly are, and that's what fiscal drag is.
Yes, and so that was
way more succinct, by the way, than the 5-hour arguments.
I think we've had a lot of refining and training now. So, but yes, so that is also another reason why taxes, the amount that people are now paying in tax has gone up.
And just saying, this is also not just specific to the UK.
No.
Fiscal drag, or the idea of this, is like something to be aware of in general, because if you are tipping into a new tax bracket, you also could say to your employer, hey, actually don't give me that 3%. Like if fiscal drag's happening, whatever, and the government is not moving your tax brackets in line with inflation, but your salary is, you could actually say, I actually don't want an increase in line with inflation because I'm going to be taxed more.
Yeah.
Instead, could you give me this?
Yeah, you could be like, can you increase my pension, or like
give me a week holiday, or whatever that looks like,
or drop down to 4 days a week instead. So
or
you could
pay for my health insurance or whatever.
It's just really important to know that it's not as black and white. If you've got like a 3% pay rise, that will translate to 3% extra in your bank account. Just be aware, like there is other things to consider. So yes, that's what's also happened in the UK. There's also inflation now is expected to be back over 5%, which, as we just spoke about, 2 to 3% is pretty much the norm. And we are seeing this around the world because of what's going on in the Middle East, and the oil price is now back above kind of $126. I know, but so that's, a lot of countries around the world are bracing for inflation. We've already started to see it come through in the US. In the UK, they think it's going to be back over 5%. We haven't been back there since 2023 when it was back at 7%. So
exhausting. Inflation coming back is not fun for anyone.
Yeah, and now because of that, people are expecting that the UK could head into recession at the end of this year. So there is higher taxes, higher inflation, likelihood of a recession. We're also seeing youth unemployment at the highest it's been in over a decade, and that is super dangerous because that leads to crime, it leads to an unmotivated workforce. Trying to engage those, like a younger worker, is really difficult once you start kind of getting into this.
I think the thing that's really hard though, and I was speaking to a friend whose partner is working at Meta in San Francisco, and they're cutting 20% of their staff. He was basically saying, I'm actually feeling okay because I'm sort of that mid-level. I'm not earning outrageous amounts where they're going to try and, cut me out because it's going to help their operating expenses. But really, the people that are going to suffer the most are new, young, grad, because it's AI that's eating all their jobs. And so that actually is kind of terrifying.
And there's been a raise in the minimum wage, which was in the budget in May.
This is in the UK.
In the UK. But that's also that's kind of having the opposite effect because workplaces can't afford now to hire young staff because they've got to pay them more. And they've got all these other... So it's like there's just a lot going on in the UK right now that is kind of hitting businesses and people at all different angles.
It's actually so interesting you say that because Emily and I were talking about how it'd be so great to have a junior editor in.
Yeah.
And I was looking at our forecast and budget and thinking it would be so great to have, someone to help with those edits. But then, and I was putting it in the contractor line.
Yeah.
And then I was like, oh, actually, it kind of makes sense for them to actually maybe be full-time.
Yeah.
But then obviously because national insurance and all those things are so expensive, it actually kind of doesn't make sense having them in a contract role. For a business does, but that's not great for young people trying to get jobs.
No.
Side note, if there's any amazing editors that are interested in that, please reach out. But yeah, I think this is not great, is it?
No. And just looking at, I know we talk about inflation, but I just kind of wanted to bring it back to a bit of reality, is that inflation has increased the cost of goods by 25% over the last 5 years. So that's if your salary... Say you're on a £50,000 salary, and that was 5 years ago, you need to be on at least 62,500 to be standing still now. That's £12,500 increase over 5 years just to be standing still.
And standing still means...
Your salary is just increasing in line with inflation.
And the reason that's so important is because if you are not, the things that you can buy...
is less because your... shopping trolley of groceries now costs 25% more than it did 5 years ago. So you can no longer afford the extra milk and butter and bread.
I just think
you
that's
have
the
to
key
cut
thing.
things out of your grocery basket or your trolley because you can't afford them.
And the key thing here is you should be asking your boss... Anyone listening, make sure your salary is increasing in line with inflation. And the reason this is so important, because if it goes up by 5%, your salary should be going up by 5%. It's not an increase.
And we sit here and we're like, it's up 5%. Oh, it's up 7%. Oh, it's only up 2%. But I just wanted to look at it on the broader scale. It's over the last 5 years of us talking about this, inflation's gone up 25% in the UK. A lot of other countries are pretty similar, to be honest. So just be aware and have those conversations with your workplace.
Side note, and maybe not a conversation for right now, something we could talk about later, but just the idea of the UK being not in a great position, it made me think about everyone who has their pension in the FTSE 100, for example.
So that's the top 100 companies in the UK.
And it's one of the worst performing globally. If you have your pension mostly in the FTSE 100, on one side I want to be like, move it. You'll get way more if you're in other countries. But also it's this weird cycle where it almost feels like an empty restaurant that actually has really good food. And people just avoid it because they think, oh, well, there's no one there, so it's not worth it. And then eventually it goes out of business. And that's quite scary for the UK economy.
Well, it's also if it doesn't perform well, people don't invest in it. Therefore, companies don't IPO or they don't want to be listed on there anymore. So then they move to other stock exchanges and it's kind of like a death spiral. And we're kind of not saying that the London Stock Exchange is in a death spiral at the moment, but it's South Korea's stock market has now officially taken over the UK stock market. And we sit here going, we're in the financial hub of the world. It's
we're really not.
Well, not really. We need to move to South Korea now. But just
to put it in perspective, there's been a 30% increase in the last 10 years versus the S&P 500, which is the US top 500 companies, which is down over 200%. It's really not doing well.
And it's also a function of there is very few tech names on the UK stock market.
That's really interesting. Yeah.
And there's obviously been the last 10 years has been an absolute surgence in tech names. Yeah, the UK is more pharmaceuticals, energy, so BP and Shell, they're doing really well. But yeah, over the last 10 years, it's been very tech focused, and that's lent more to the US, to the US and Asia as well. Yeah, you got Samsung and all of that. So,
which actually brings us on to reporting season. This is Vic's favourite time of the year. Reporting season. Oh, yes. Think of when you see all this corporate memes online and they're like, it's Q1, it's Q2. It's basically the idea of the financial year is broken up into quarters.
Yeah, in the US, yeah.
in the US. Well, kind of everywhere. It's just that it's different quarters in different parts of the world.
And in the US, you have to report quarterly. In like Australia and New Zealand, you do it twice a year, which is actually so much better.
Yeah, but basically they have these reports where they have to put out in particular quarters to show investors the financial health and the future projections.
And it's part of being a public company, right? You have to disclose your financials publicly and discuss them with investors, and that happens 4 times a year in the US. And so it does lead to a bit of movement in share prices because people now have more information and they can, dissect and figure out if the company's doing well or not. And so Alphabet, this week's a big week because we get a lot of the largest companies on the US stock exchange. So we had Alphabet, their share price was up.
This is Google for anyone that
Google,
doesn't know.
Yeah. It's their 11th consecutive quarter revenue growth, which for, a big company like Google is insane. They're growing 22, they grew their revenue 22%.
God.
Like you don't see those figures in trillion-dollar companies.
No.
The dollar value of that 22% increase is insane. Like, you'd see that at a smaller company when your revenue's going from 1 million to 2 million or,
Yeah, because it's
harder
to jump in a big company that's already making a lot of money to increase that by even 1% is enormous.
Totally.
Let alone 22.
It's like the law of large numbers, what you call it, when as you get bigger, it's actually really hard to keep those kind of double-digit growth rates. But anyway, they managed to do it.
Can I just do something in that, which I think is quite a penny drop moment for me? That's also where you think, when Vic talks about the future, like people invest in the future that they think they're going to see, it's a lot harder for a company like Alphabet or Google that's already enormous to go and then continue to do really well because it's already done really well, which is why when people make a lot of money, often it's when they kind of make a bet on a smaller business that they think is going to be big in the future because they have further to go, or it's easier to make massive gains when you're smaller.
Yeah.
Which I don't know if that's helpful for people, but it's almost like if you'd invested in Alphabet 20 years ago, that growth, which is why it's just like it's insane that they're still doing 22%.
I know. It's like it's easier for a smaller company to double in size than it is a trillion-dollar company, but we're actually, I'm going to eat my words because we're seeing these companies are just doubling. Like it's crazy. Microsoft, this is one of the very few tech companies now that is actually making money off AI in terms of the public. Like with Google, Gemini, like it's all an add-on. You're not paying, it's enhancing your
stunning
user experience.
when you're already paying and then all of a sudden you get it for free.
Oh, totally. As a user, you're like,
now I've got Gemini and all these things.
Whereas, out of all these results that we've seen so far, everyone's talking about AI, how much they're spending on it, but Microsoft, the highlight of their result was that AI is no longer just a cost. It's actually becoming a big contributor to the business. And it added about $37 billion in annual revenue last year. So
what is it that they're selling? How are they doing it differently?
So with Microsoft 365,
yes,
it's an add-on. Oh. So you have to upgrade to use AI. But they've got 450 million people paying for these, what they call commercial seats on Microsoft 365 now. That's only 3% that they've converted to AI.
Oh, whoa. So there's huge growth for them.
So the runway is, I looked at that and I was like, oh, only 3%. And then I was like, actually, no, that's like the biggest opportunity.
Yeah.
So
also with Microsoft.
Love Microsoft.
Yeah. Microsoft's making a comeback. Never actually went anywhere.
Yeah.
But I think the thing with Microsoft as well is because it's so clever because it's so embedded in these enormous companies that are struggling to know how on earth they can integrate AI because it's way harder to do when you've got all these archaic systems.
Yeah.
So for people that then see, oh, perfect, we're on Microsoft and we can upgrade and pay to get access to AI, it's so genius because it's all these businesses that don't know how to do that. And of course we pay for it.
Microsoft is more of a kind of a B2B rather than, I guess
so
Amazon. So many
of the businesses we work with are on Microsoft.
Yeah.
It's definitely more of a corporate and like big corporates.
Yes, yeah. When you're like, send a Google Meet, and they're like, oh, can we do Teams?
Could you do, yeah.
You're like, oh.
We can. Or like, also like the login with Microsoft, there's so much more security around it. It's definitely built for bigger businesses that have to be quite careful about data leaking and whatnot.
Amazon, they nearly doubled their profits this year, which is insane. Like and then I started digging into their Prime, so that's like their subscription base. They have 230 million people that have signed up to Amazon Prime.
Because do you know what it is? They're so clever about it in terms of when you log in, all of a sudden you check out and they're like, do it for 7 days and then you automatically make back what you would have paid in shipping straight away. So of course you're going to do it.
They got a bit of trouble for like making it really difficult to like cancel,
it
but
is. I know.
but gosh, I know. I think that too. I'm like, oh, I just click through, and then I'm like, I've signed up. You know?
And then you don't even know where you've signed up. Yeah.
But their Prime members spend double than their non-members.
And that's what I mean why it's dangerous. Because then all of a sudden you're like, oh, well, I need this. I'll quickly get it. And it's delivered straight away.
Well, it's also like if it's free shipping, well, I might order more.
Yeah.
And so that's their whole psychology. So they're like, this is such an extraordinary piece of like consumer psychology of, and it's why their retail business is growing massively. Their cloud business saw its fastest growth in 3 years. Like there's just... Anyway, these companies are just absolutely killing it still, which is mind-blowing. And then lastly, we had Meta. Yeah, they had their fastest quarter of growth as well this year.
Wow.
There is 3.6 billion people that use one Meta app a day. So like Instagram, WhatsApp, Facebook, that use every day 3.6 billion people. Like that is more than a third of humanity that uses... Imagine running that business.
No,
being
I
like,
cannot.
I can get in touch with the third of humanity, like dropping years.
No
wonder they're getting pulled up for.
Oh, I think they need to start like Meta AA. I'm completely addicted to all of their apps.
I was like, what would that be? Yeah.
No, I'm serious.
Yeah, no, I agree,
this morning, I found myself on my Instagram. The first thing I did. My boyfriend came into the room and I actually threw my phone across the ground and hid under the covers like a child. I was so embarrassed.
I do that. Simon's like, what are you doing? Nothing.
We need to come
up
with
Because I just feel I feel stupid.
It's same. I'm like, it's so embarrassing.
And I'm like, no, I'm actually reading the news.
Yeah. I'm like, I was on email actually, which is just as bad. To be fair.
Yeah. It's like, what are you doing?
It's slightly less dumb than Instagram.
I know.
Okay. Anyway.
I try to train my algorithm to be newsy, and then all of a sudden I'll stop on some like, I don't know, collagen eye patch, and then it's like starts feeding me.
I know.
And I'm like,
it's
damn it.
so bad. Yeah.
Anyway.
Constantly stuck on the
I think
vortex.
The big question of this is when does AI investment start showing up as actual revenue? Microsoft's doing it. A lot of the others, it's just, better versions of older products. So, I think that's kind of what has people concerned. It's like there is billions being spent on AI. And yes, it improves customer stickiness. Like, cool, Gemini, we're going to stick around because it's like it's now better. It's a better product. But when you're spending that much, you have to get a good return on investment for spending that much.
I mean, it's kind of nice to see someone's making money out of it. The fact that Microsoft is actually making money, because we haven't really talked about that at all. There's just all this like, well, where is the revenue coming from? How are people making money? This next one I'm quite excited about, and I love that you titled it Lululemon Drama.
Lululemon Drama.
So dramatic.
I mean, we've spoken at length about how badly Lululemon has been doing lately, not lately, for a long time now.
Yeah.
They were the poster child for athleisure, for health and wellness. Everyone was wearing their leggings, it was, and they did so well for so long. But when you're at the top, there's kind of only one way to fall. And we've seen it lose its edge to Aloe. I also just think when you're doing one product like leggings, how do you keep expanding on that, right?
Yeah.
So anyway, their share price is down 50% in the last year. And I want to put that in perspective because the S&P 500, top 500 companies in the US, is up 30% in the last year.
Oh, shit.
So that is 80% underperformance. Like you could have owned the S&P 500 and had a great 30% return. If you'd had all your eggs in Lululemon, you would have underperformed most people by 80%.
Oh, it's not great.
Yes, 50% is bad, but when you put it compared to what everything else is doing, it's even worse. So it's in a bit of crisis mode, and it's just announced, the reason we're talking about it now is it just announced this week that it has got a new CEO, and she is an ex-executive from Heidi.
I was very excited to see that.
Same. And then as I digged in, I was like, oh.
I know, same. I thought the same thing. Let's explain why we both thought that.
Yeah. So she's come from Nike, and I saw that headline and was like, this could
Makes sense.
Could be a really
Nike,
good turnaround.
Lululemon, great call.
Anyway, Lululemon was actually founded back in 1988 by Chip Wilson. He served as CEO to about 2005. Then he left, and they'd had a number of CEOs since then, but the brand just really hasn't. It's struggled massively. So he has been pushing, he still owns 9% of the company, and he has been pushing for a new board of directors. Because remember, shareholders vote in the board of directors who vote in the CEO. So if you want to bring about change to the CEO, you need to bring about change in the board, because otherwise the board can put in a CEO of their choice. So he's trying to bring in new directors, so therefore he can bring in a new CEO or CEO of his choice. But that's all kind of has broken down. Then we spoke about this briefly as well. They had an activist investor called Elliott Investment Management, which is one of the most feared activist hedge funds. Like, they really get in there and bring about change. They bought over $1 billion of Lululemon shares. So to put that in context, the whole size, the whole market cap of Lululemon is $16 billion. So they own $1 billion.
So like a 16th of the company, which is a lot.
Yeah. And they had someone they wanted to put in who was from Ralph Lauren. And they had that person lined up. And then you've got the existing board that has appointed Heidi. So
sorry, I actually missed that part. So the existing board, which the founder who actually started Lululemon is trying to replace anyway, is the one that's made this decision.
Yes, yeah. And the share price fell massively on the news.
How can it dropped fall about anymore? I know. Bloody hell.
It dropped about 15%. So that means investors aren't happy with the board's choice of Heidi from Nike. So therefore,
good shit must just be in the background, like, listen to me.
I know, yeah.
Stop making stupid decisions.
So I think there's going to be a bit of noise going on at Lululemon, because he'll have to get a shareholder vote to replace the board. He has to get people on side. Elliott Investment wants someone different.
Oh, so how awkward
there's kind of
Heidi.
These three different angles. Like, if two of them could just band together, they could bring about change a lot quicker. But it just goes to show like how distracting it can be when a board isn't aligned, or it's just like there's so many probably egos and people seeing potential in Lululemon still, but it's been run poorly, and it must be so frustrating if you owned 9% of the company like Chip and just seeing all these poor decisions being made, and you're trying to bring about change. And it's kind of heartbreaking, right? Because it is a good brand. I do think it has just lost its kind of like cool factor a bit.
I was about to say, I think that's kind of the issue. Like, when I was looking into this, and at first I thought Heidi amazing, but then Nike's actually done quite badly.
Yeah.
So having someone that's come from another, almost consumer-facing business is not that great to then put someone into that role. I think Lululemon used to be genuinely cool. Now, like the ones that you mentioned, like Alo Yoga, which is still private, it's not a public company, but, you see people like Kendall Jenner or Hailey Bieber or Taylor Swift wearing that brand, and it makes it cool again. And then you see Skims, Kim Kardashian's brand, which is still selling. Now it's like started selling athleisure. So there's all this competition to be cool in this space, and Lululemon is not doing that well.
It's like skincare. It's like every celebrity is kind of launching their new, like it's hard. And to be honest, like I don't think they'll ever get back to where they were. Like they had a great sweet spot for many, many years. But Elliott, they have an incredible track record of turning businesses around. Not necessarily back to where they were, but at least.
Why would you not just let them do their thing?
I know. And so, I mean, if I was Chip, I'd be banding with them and being like, cool, how do we get, Also, like, there's options like to sell to Nike, right? Or to, maybe it isn't a standalone business, but they'll be looking at all options. And just like with any kind of decision, there's going to be people that think one way is best, people that think the other way is best. And I just think it'll be incredibly distracting, because management isn't going to be focused on growing the business. They're going to be focused on, how do we deal with all this kind of activism going on, and how do we deal with all these kind of different angles that people want to take in terms of board ownership. Like sometimes it's great because it can create more value, but at other times it can be incredibly distracting.
Well, I think, you then look at Coachella, for example, and they had that Alo Pilates studio, and all of the biggest influencers went there.
Oh, yeah.
And while Lululemon's like scrapping around trying to figure out who their CEO is, there's all these other brands putting cool into athleisure. If they were putting their time and energy into doing the same stuff that other people are doing, Lululemon could be cool again.
It's funny, I was walking down Oxford Street and I saw this massive queue outside the Lululemon store, like down the road, round the corner, and I was instantly like, oh my gosh, they got like,
I love that that's your immediate thought.
And I was like, oh my God, this is a research. I was thinking more of like buying this. I was like, oh my God, there's something, are they doing like a really good collab? Is the start of the turnaround? And then it was like marathon metal engraving queue. And I was like, I mean, quite genius for them. They had all these people through the store.
Yeah, nice.
Quite genius for them to put their hand up and be like, we'll engrave, or, like,
But that's the sort of shit they should be doing more
Totally,
of.
yeah. But it's also like one hit wonder. But anyway, there's an annual meeting in June to figure this all out. I'll be watching it very closely because it'll be like a Netflix drama. I mean, I'd love to go along and just like
I kind of
there.
do. Honestly, it's so shocking to me that I'm almost wanting to come to.
Yeah.
Like, who am I? So one of the topics that we were going to talk about in this episode was like sort of women, babies, what's going on in that space, which maybe I haven't made sound very interesting. But when we started digging into this, Vic's done a lot of research and then I started doing research and we've now got so much information on this and realised it's like quite an enormous one that there's almost too much to talk about in a Curve Weekly. I don't know if we want to give a headline here or if we want to just see if people are interested in more of a deep dive, but maybe just give a top line, Vic, on why this caught your eye. And we can just do a poll maybe if you listen to this and you want to hear more. I think we almost do, actually, maybe we do a full episode on it.
Yeah, it was a headline around, we always talk about like women are having less children or women are delaying having children, but I didn't actually realise that the delaying of having children, like the impacts that has, and from like a personal finance point of view, but also from an investment point of view, like how does that, there's so many opportunities and so many things to consider, and like it also costs more if you're having them late. Like there's so much in it.
It costs more if you have them later.
Because of, you have to use IVF and all that.
Oh, yeah. Of course, yes.
But then you have more, usually more disposable. Like there's just so much to unpack. And I just thought it was like, okay, women having less children, they're having them later, which means overall must mean there's less babies being born. But it's actually quite interesting. And just the split between the haves and the have-nots. And now it's coming down to having children, which is quite sad.
Yeah. And it's so interesting because I interviewed someone. We actually haven't released this episode yet. It was just the other day. But one of the things that we did speak about was the idea of people delaying having kids and what that's doing for the economy, for businesses.
So many ripple effects. It's insane.
My God.
Yeah.
But also it really changed my perspective on everything in terms of, there's obviously the financial barriers for a lot of people that are choosing not to have kids yet because they want to be in a position when they do it. But then when they do it, they then maybe have to pay for IVF because they're past their fertile years.
That's like the tip of the iceberg versus like the ripple effects.
So much to talk about with this. So I don't know, if you're sick of this conversation, you can vote no. If you would like to hear more, I actually was so surprised at how interesting I found this. And I think that when it comes down to whether you have kids or you don't have kids, understanding the macroeconomics of what this issue is doing and how it's impacting not only your own like personal situation but like businesses in the economy, but it's also so intense
from an investment point of view as well.
Yeah,
it's quite exciting.
Yeah.
To have such a mega trend.
True.
Right at the forefront of.
Okay, right. Let us know if you want to hear more on that. We're just going to really quickly answer a community question before we wrap up. I'm going to read this out. So every week I see in your sort of in the red, in the green segment, and I feel like maybe I'm going wrong somewhere as I'm always in the red. I keep blowing out each month, but it's frustrating because I feel like I really don't spend much and my outgoings aren't that big. God, I feel so similar. I really want to start investing, but I don't actually have anything left at the moment to invest. Do you have any recommendations for how to get my finances organised? I've heard about Soph talk about her emergency fund and her pots and the way she organised her money. Please teach me as I really want to start investing. God, there's a lot to unpack here. Firstly, in the red and the green, kind of love that it's taking off.
I know.
If anyone hasn't seen this, it's in our newsletter. Sign up for our newsletter via the link in the podcast show notes. Okay, where do we start with this? God.
This is just exactly what we're going through right now with the IOU.
Yeah.
Yeah, I'm kind of like, there's so much here that I'm like, that would be perfect.
Yeah, I agree. So we released a podcast this week with Lucy Blackerson. It's the third episode for our IOU partnership, which we're doing with BNZ, and it's literally designed for beginners, particularly people who feel overwhelmed by like the fact they haven't actually got the foundations of their finances sorted. Yeah. So I would say firstly start listening to that series. It's really obvious if you scroll through our podcast, like what is the IOU? It's like a kind of retro looking light blue colour. And we do actually have IOU, the practical lessons too, which if you're like, I just actually would love to sort of get it sorted, you can find out all the details in the podcast show notes for that. We'll just maybe put a link. But let's just do an overview answer as well, because I'm sure a lot of people listened to that and thought like same. Maybe we focus on the part of like not having enough money week to week to invest, because I do think that that's such a common feeling for so many people.
Yeah, I think it's creating like a budget, right? Or like being very aware of your spend. I think the first thing is like how much you're incoming and how much is your outgoings. Like if you don't have visibility on that, you will keep blowing out each month because you don't have visibility to put how much do I put in an emergency fund, how much do I put in my pots, how many do like, and therefore how much to invest. I think that's really,
it's like
really
the
important.
training wheels for investing.
Yeah,
really.
it's like if you don't have the full picture, how are you supposed to know? Because then you're like, oh gosh, that's right. I had that $200 that went out. Sorry, that $200 that went out.
I'm like, who has $200,000? Jealous, so jealous.
£200 that went out to that you didn't know about. You know, like it can just really throw you. So I think having visibility across everything is absolutely the first step. And yes, that means probably being a bit uncomfortable and realizing how much you're spending on eating out or, you know, subscriptions or whatever it is. But
I also want to add, I think it's important to say there is also an amount that, you maybe don't have anything left over to invest.
Yeah.
If you're earning £25,000 or 30,000 New Zealand a year, it's not a lot of money to live on.
No.
So I think there has to be an element of knowing it's actually okay to not be putting that much aside. What's probably more important to think about is the habit. So for example, what Vic's just talked about with putting the foundations in place, even if it is literally £5 or $5 New Zealand dollars a month going in, the habit of doing that from when you're not earning a lot and being able to increase that as you get more money coming in each month. It's more the mentality and the ritual and the fact you're doing it, knowing that not 100% of your pay should be going towards your spending each month. Because otherwise, if you're used to that, when you then earn more money, you'll just expand what you spend on. And I think if you can just, it's almost like just get in your head the fact that ideally you want at least 20% of your money going towards, you know, future stuff like saving and investing. But the reality is a lot of people don't have that much.
even if it's 5 or like
it doesn't
whatever,
matter. Just start automating an amount, but you do have to start with the basics of knowing all of your different amounts before you can do that. So I think IOU is a really good place to start if this sounds sort of familiar for you. Don't feel so bad about the fact that you're not maybe doing £100 or, you know, $100. Start with something, because it is really amazing how much the mentality shift can help make you feel better about what situation you're in. If you're just doing something in the right direction, you know?
Then you kind of adjust and don't realize that £10 a week or whatever has gone out, and then you start being like, cool, I'm going to try and increase. It's like starting small steps is better than just like, oh, I'll wait till I can put away £200. It's like, no, just start with 10, then move it to 20, then 50, then, you know, like.
And I think the other thing to keep in mind is you do actually have to constantly assess what is going into the different buckets or your budget, because as you get more money coming in, the last thing you want to be doing is just lifestyle creeping without thinking about it, because there might actually be at some point soon an extra 200 that you could put into investments. But if you're actually just spending it without awareness of where it's going, you're actually never going to get anywhere. And building wealth is not about how much money is coming into your account. It's the habits that you put in place. So I think if that makes you feel better, there's people that are on teaching salaries, which unfortunately are really low, that have more than people that are on finance salaries because they just constantly spend everything they have. So don't feel disempowered if you don't have a lot, but just put those things in place to get yourself into a better position. That is all we have time for today. Have a great week, everyone. Thank you for listening.
Have fun tonight, so.
Oh my God, thanks. Yeah, I'll take lots of videos and photos. Thank you so much for listening to The Curve Weekly. Make sure you hit subscribe or follow wherever you're listening so you're always up to date with the latest finance and investing news.
And feel free to leave a comment to let us know what you thought about this episode, because we would love your feedback.
We've got new Curve Weekly episodes for you to listen to every Monday, but until then, listen to Erasing the Curve. These are our in-depth podcast episodes where we chat about all things money.
We're also around all week on socials if you're hungry for more Curve content, and all the links are in this podcast's show notes. We hope you have a great week, and we'll catch you for the next episode of The Curve Weekly on Monday.
Okay, quickly, The Curve was created to empower and educate you about investing, but we are not financial advisors.
Our platform exists for educational purposes only, and it doesn't provide personalized investing advice for your individual needs and should not be relied upon to make an investment or financial decision.
And always remember to do your own research before making any investment or financial decision.
We're here for any knowledge and support you need, but the final call is always yours.
And thanks for being here.
You got this.
Yeah, we know you got this.